So I just wanted to share this with you real quick. I saw today on HuffPost that Vancouver housing demand drops like a rock and prices are now falling. So this is something I've been following in recent months. I think, really since May or June of this year. Um, Basically, sales volume in Greater Vancouver has been down, something like 35, 37% compared to 2017. So this article came out today, October 2nd, and it's respecting the sales figures from September 2018. And we can see here the city's sales slump deepened in September, with home resales dropping by 17.3% from August. So it's down 17.3% from the prior month and down 43.5% from the same month a year earlier. New data released Tuesday, that's today. Down 43.5% from the same month a year earlier. So that is a big drop, almost half. So this has been going on for a few months. I think our provincial government is going to have a revenue problem. I know it didn't show up in their mid-year update, but I think that only had revenue figures up to June, if I recall correctly. So with this massive decline in sales volume since then, certainly August, July, and now September have been just significantly lower in sales volume than 2017, which I suspect projections were based on. Indeed, the NDP, when they came in, they projected increasing revenues from property transfer tax. That's a major source of revenue for the government. They every time a home is sold, the purchaser has to pay property transfer tax, and that's paid per transaction. It's a good chunk of change, and with sales volume down by 43%, that's got to really, at some point, put a significant dent in that sales revenue. Of course, there's going to be knock-on effects too for realtors. That's a major, it turned into a major industry in Vancouver and Greater Vancouver. With the value of homes and the number of homes that have been selling over these last few years, decade even. It's a major industry, and so 43.5% drop in sales volume. Just imagine that in any industry. That's a really debilitating slowdown. So there's going to be a lot of realtors earning fewer commissions. That's gonna hurt income tax receipts there for the provincial government as well, and of course, any things that they buy and the commercial activity that they spur when they spend that money is not going to be in the economy. This doesn't seem to be impacting the BC's GDP yet, but I really think it will. I mean, it seems like it sort of has to, just based on what I just said. The realtors are fairly sizable chunk of GDP, and people selling for one, and people selling their homes is another significant source of sort of the release of capital into the economy. So seeing this come down so significantly, it's going to have some impacts there. I've been expecting this for a while. To me, I see this. I see housing prices as closely related to interest rates. Basically, when people go out to buy a home, of course, they're getting a mortgage, and the amount of mortgage they can borrow is set by the amount of monthly interest rates they can afford. As interest rates go up, if your income's not going up, the amount of mortgage you can afford it goes down. So you you and everybody else trying to buy can offer less money, to buy a place. So, now, does that account for a decline in sales without a decline in price? Not directly, but I think what you're seeing is a lot of investors' money probably moving out of real estate. You can see this kind of trend in a lot of the major metropolitan areas globally. I think London is really struggling. Some of the major cities in Australia, sales volume and prices are starting to decline. New York City even is declining sales volume, and indeed I've read reports that across America there's similar declining sales transaction in homes. So to me that suggests that people with money to invest who've used real estate as an investment, a place for investment, probably are looking elsewhere right now, considering that they know interest rates are going to be climbing for at least another year, and that's going to put pressure on prices. I suspect they're getting out now, or they're just not showing up to buy anymore. So I think we will see soon, in the coming months, I think with the inventory piling up, and this article says that here, with unsold listings piling up, the supply of homes for sale is spiking, putting downward pressure on prices, which are now falling in all categories and in most areas of British Columbia's lower mainland. So that just makes sense. Sales volume is down. People keep listing their homes on the market because people need to sell their homes for a variety of reasons. And though the number of homes listed might be going down because the price isn't as attractive, it's not declining nearly as fast as the sales transaction volume. So, when the newly listed homes outpace the sales volume, eventually you're going to have a bunch of stuff on the market, and it's going to be a bit of buyer's choice. So this is the Real Estate Board of Greater Vancouver, President-elect Ashley Smith. A quote from her: Metro Vancouver's housing market has changed pace compared to the last few years. Here's the president of the REBGV noticing, hearing presumably from her realtors, the people she oversees, that things are changing. And then they use some realtor speak here, balanced buyer's market. I think I just want to touch here. So this is an interesting graph that's in this article. It's a metric of housing demand in Greater Vancouver this year, starting from January. And this is basically, what is this? This is basically, here it is. Sales to active listings ratio, or the number of homes sold per 100 available. So this gives you a sense of how much of the market is getting bought up. In January, close to 60%, and was rising through to March. And since April, this has really been declining. So as I said before, with respect to the provincial budget update that came out, I think, in early September there, it only reflected figures up to June. So it might not, I think, to the start of June. So it's not going to have, June, July, August, and September, which you can see here by this demand graph, that, there's been a continued market decline in demand for homes. I think this article speaks to prices as well. Yes, the benchmark price for a detached home in Greater Vancouver is down 4% in the past 6 months to a now very affordable $1.54 million. So the benchmark price is sort of, it's not an average. The benchmark price is something that the the real estate board determines based on what they think of as kind of a typical home. You know, obviously there's some arbitrariness to that, but they try to identify what you know, a typical home buyer wants. You know, averages can skew pricing if, you know, if there's a lot of really expensive homes sold or no expensive homes sold. They can shift that average in a way that probably doesn't reflect the average cost of, or the cost of home ownership for the average buyer. Prices have turned negative for townhomes and condos as well. Condos are down 1.5% in the past 6 months to 687,000, while townhomes are still up from 6 months ago. Townhomes are still up from 6 months ago, but started falling in the past 3 months to 837,000. So these declines are pretty small, and, you know, minor declines. I mean, nothing to panic about. But the point is, you know, when we've had increasing property values in this city for, you know, I mean, really 20 years, if not, you know, if not longer. I mean, I'm trying to remember the last real correction. I mean, even in 2008, things sort of slowed down or went level, but and there were some areas and jurisdictions where prices did drop meaningfully, significantly. But just a point that there has been some declines there, but I think the sales volume decline is much more extraordinary, much more unusual. I didn't read it here, but I remember, you know, following this in the last couple months, seeing that sales volume is now down at something like 18-year lows. You know, and I think they've only, you know, been tracking it for 18 years or something like that. So these are very low sales volume figures. I expect prices to follow, not just for the sales volume, although obviously that's a big piece of it, but because of course we've had new mortgage restrictions come in place. You know, we've had a number of changes by CMHC that really affect who can qualify for a mortgage. You know, the requirement that you have to qualify for a mortgage 2% higher than the posted rate. Obviously, that's, you know, it's going to just reduce the amount of money that people qualify for. The other thing I mentioned was interest rates. Interest rates are projected to continue to increase through 2019, you know, both by the Bank of Canada and really what's probably more relevant for mortgage rates, the Federal Reserve in the United States. I was just looking at an article here in the Financial Post. You know, pace of interest rate hikes seen picking up with trade deal in hand. Of course, we've got a new trade deal here recently, so there wasn't a lot in this article. Some opinions from bank managers, or chief economist of Bank of Montreal. So, you know, BMO is now calling for 3 rate hikes in 2019, January, April, and July. I think traders are already expecting one in Sunday. Wow, I was reading and thinking at the same time. In September. No, September's passed, so obviously there wasn't one. But I read it in here. I mean, regardless, another one this year. I don't know the day or the month, but they are expecting another rate hike this year. So with another 3 in 2019, that would be 4. They've been doing, you know, 0.25% so far every time they raise rates. So that would be, you know, 1%. That doesn't mean mortgage rates, you know, will go up exactly 1% or only 1%, but it does indicate, you know, you can be pretty confident that's going to be a baseline for increases. So if you're looking at 3% right now, or 3.5%, or 2.8%, you know, you might be looking this time next year at 3.8%, and it's still historically very cheap money, but you know, it's relative. You'll be competing You know, as a seller, let's say, you know, if you're looking now or a year ago, you're selling to people who can borrow at 2.5%. You know, a year from now, you'll be selling to people who can only borrow at 3.5 or 4% or perhaps higher. You know, depending on how bond markets go. So, you know, that cost of money really impacts the price. You know, so or really impacts the amount of money people can borrow. So I think it has to eventually impact housing prices here and globally. So we see, as I said, we see global demand reducing. So I think that's what that's about. You know, I took a quick glance through the Bank of Canada Monetary Policy Report. You know, I haven't read this closely, but you know, I noticed throughout you can gauge their attitude here. You know, they use language like solid demand. You know, is expected to support investment despite, you know, trade policy uncertainty. And that trade policy uncertainty, of course, was, I guess, just resolved. So they could just even remove this despite altogether. But throughout this document, you see a lot of confident language. I mean, so it's, you know, spending is expected to grow. It's only moderate, but it, you know, we're in a growing economy. And so my only point being here is this report was from July 2018, and this report is very upbeat with respect to the economy. And so when the central bank thinks that the economy is upbeat, you know, the economy continues to operate near potential. That's good, right? We should all operate near potential, with inflation close to 2%. So this confidence that they express in this document is just one, you know, direct source indication of their confidence. And when they're in the economy, when they're confident in the economy, that means they'll be raising interest rates, you know, from historical lows. You know, those lows were there in place to stimulate the economy, and now clearly they're talking about the you know, the economy operating close to full capacity. GDP is expected to expand somewhat faster than potential. Not quite sure what technical use of potential they're using there, but you know, you get the gist. The economy is growing; it's expanding faster than expected. So that's this report, and that just indicates to me that indeed, you know, the traders, you know, have it right, and of course they have more information than I'm accessing here. That, you know, the central bank is looking at continuing raising interest rates from these historic lows. So, you know, we're going to see more of this. It's going to continue to get more expensive to borrow money. Which means the price of homes will fall, you know, until that process works itself out. And it looks like we're in for at least another year of rate increases, the way things are set right now. So that's all. I just wanted to touch base on this trend here. It's been going on for a few months, and it's not slowing down. This is the biggest decrease I've seen so far, down 43.5% from September 2017. That's going to be hard for realtors, and I think, you know, hard for the sectors of the economy that rely on them, and I think hard on government revenues here coming up. So that's all I wanted to comment on for today. Thanks very much for listening.